Good morning, trading world. It is April 14th, 2023, 8:26 a.m., and this is my pre-market outlook and technical analysis for day trading the markets. We got some big bank earnings beats early this morning, but will it be enough to prevent a pullback on the day? Even with positive earnings, what we really need to pay attention to is the guidance calls taking place later today. Remember, the market is a forward-looking pricing model, and these guidance calls are very important to understanding what the forward outlook is. I placed a bullish butterfly bet on JP Chase because technically you can see the bullish activity coming, but will it hold through the guidance call? Another reason I placed the bullish butterfly bets on not just JP Chase, but also in the SPY as well, is because I have enough midterm bearish positions on, so I needed something positive or some positive bets in the short term just in case. It's clear to me that the fuel for this momentum ride up is getting low, but those last spurts could be very dangerous to an account if you're thinking short term. This brings us to the key levels to watch for on the day. Or actually, before I go to the key levels, again, I've started to do this a little more often where I come in and post or show you the actual upper and lower edge of the market maker's expected move. And the upper edge is at 416 on the week, and that lower edge is around 402. And to me, it seems we've come quite a long ways, and it seems like we're going to go get that 416. I said that earlier in the week. The market just has it in its gut that it just wants to go check off that 416 level. So today may be the day that we go do that. However, it's not going to be a straight line to that 416 area if we go get it today. Expect some flashes down to kind of start us over. It's not going to be an easy straight up ride. I'm expecting it, for every step we make forward, we're going to have a candle that's going to take us 2 to 3 steps back, and then we're going to keep grinding back up, and then it's going to take that one long or 2 long candles to knock that progress out as we continue to grind up toward that 416 area. So it's not going to be easy, but at some point, maybe later in the day, after the market makers start calling it an early day to get the weekend going, it may just kind of let up and start to flow that way easily toward it. But like I said, I don't see it being easy at first. All right, let me bring up the key levels of the day. All right. Here we are back with the key levels of the day. Starting on the resistance side, we have the jack resistance at 414 to the 415 area. Make sure I said that right. 414 to the 415 area as the jack resistance. Then we have our queen resistance area at the 416 to 417 area, which is going to be very important today if we can make it up here. And then we have the king resistance area, 418 to 421, for me, it seems a little far-fetched today, but in this environment, you never can tell. But if this was truly the end of the move, I would be looking for that explosive alternate thesis up here and beyond. If this was the truly last gasp of a move, but I don't really see this being the last gasp of the move today. Then let's come over to the support side. We have our jack support at the 413 to the 412 area. And then our queen support is going to be 411 to the 410 area. This is going to be very important on the day because I see us kind of retracing back down to that maybe 410, 409 area at some point this morning. Then we have our king support 409 to the 407 area. The main thesis for today is bearish, closing below the 413.47 with a projected target low of between 413 and 407. Maybe we can strike a little bit lower, but and maybe that 407 is about where I see that kind of point where it invokes a response from the bulls to kind of come back in and start buying. Again, let me say the main thesis again is bearish, closing below that 413.47 with a projected low between that 413 and 407. The alternate thesis is bullish, closing above the 413.47 with a projected target high of between 414 and 421. The main channel we're in is 397 up to 416. The main channel below is 397 down to 379, and we should also be aware of the main channel above, which is 416 to 425. Yesterday, the market strengthened breadth of open gap up, fell briefly off the open and found support and never looked back on the day. It took off like a rocket to the upside. I expect strength to open slightly weaker than yesterday, stumbling early, possibly turning around mid-morning to get stronger. We do have harmony between the technical side, which is bearish, and the quant side, which is also bearish. However, I'm a little saying this, trying to put this together because this is what has me not willing to take full steps on the day or full positions on anything I do today, is because we're kind of in that irrational stance as the weekly is comfortably in control today. The futures have a bearish bias for the day with harmony between the technical side, which is bearish, and the quant side, which is bearish. This is the only thing that gives me a little more comfort to the downside today, because yesterday I decided to take some bearish options on futures at a little before, a good ways before the close yesterday, thinking that we would have a pullback coming into the morning and at least stumbling, so that I can try to profit there and take them off and maybe set up again toward the latter part of the day in new bearish positions. But we'll see. In order to lay some full positions, I would definitely need to see some time frame confirmation and alignment at the 4-hour and daily. It's a lot to get into, but I've talked about this over and over about how I look at the time frames. Is they're all running a 4x1 relay, and each runner has to run its lap before it can hand the baton to the next runner. So I need to see weakness and rejection in the 4-hour before I'm really comfortable at taking a longer term bearish position, because the weekly is in control right now. So we're starting to get that, and that's why you're going to see these rejections that spin off these long red bars or downward bearish bars, and then we kind of grind back up and wipe them out. But you're going to see these long red bars just come out of nowhere and knock everything out, or all that bullish activity out, in a single bar or two. And that just lets me know that we're getting close, but it's not quite there yet. This brings us to the scenarios on the day. All right, here we are back with our most probable scenario on the day, which is going to be our expanded range day structure. We could struggle early morning, rejecting at resistance, expect to find a pocket of strength to push us, maybe not through resistance, but at least back up to resistance, midday or later in the day. So that is our expanded range day structure. All right, our next most probable scenario is going to be our rounded reversal day type structure. We could get a continued push lower toward the Jack or Queen resistance. We could get a continued push lower toward the Jack or Queen support area. And I need to correct that. Find our midday chop around either the Queen or King support, and then spend the second part of the day going back up with the same energy of force we went down with the first part of the day. That is our rounded reversal day type structure. Also, on the rounded reversal day type structure, I want you to be aware of the vice versa alert for today. On the vice versa alert, we could have a nice splash out pre-market where we get a really nice splash down somewhere around here, maybe the 412, 411 area, somewhere there. And we get some kind of chop to start the day off, and it's possible we could go back up, and it would look something like this, where we would get that steep rise up mid-morning, find our midday chop, possibly around the Queen resistance area. That's the midday chop. And then end up going back down with the same energy of force that we went up with the first part of the day. This is our vice versa alert, and as we get closer to the opening, this may come more into focus, being the vice versa alert on the day. And here we have our last scenario, which is going to be our trend day down day type structure. We could open gap down and start with a push back toward the previous close represented by the blue line. Find resistance on or before that previous close, then begin the downtrend for the day. We usually find midday chopper on either the possible queen or king support area. Not always, but a lot of times on a trend day, we look to come out the second part of the day looking to continue the primary trend of the morning, which would be down, but it usually turns into a head fake where it looks like we're going to continue lower, but we end up reversing and getting into some type of rally or sideways trade going into the close or just before the close. So those are the scenarios that I'm looking for. Be very, very careful, because this is beginning to be a very dangerous time. I described it before in another pre-market as that dog being on the chain and he's looking to, you know, like that when you walk by that very dangerous dog, how he looks to lunge toward you and he immediately gets yanked back. Price action is going to do something similar, where it's going to take that run and get yanked back, but eventually the chain will break or the range will break. So you have to be very, very careful during this time. Place your positions wisely and give yourself plenty of time, because things don't really happen as fast as you think, and the abrasive up and down really shakes a lot of people out of trades, even when they're in the right direction and everything right. But just that abrasive up and down is known to shake traders out of positions. So as always, your most important job as a trader is to protect the capital that you already have. We do this by knowing and understanding the risk that we have on in each position and managing that risk in accordance to our account size. I hope this helps. Wishing you a positive trading day. Let's go out and make it a great one.